Hello fellow investor, if you click to this video it's because you want to know which is better between Sarwa and StashAway. These are two of the biggest Robo Investor platform out there, especially for non-US customer. And a Robo Investor is not like a stockbroker. You don't need to buy and sell stocks or ETFs by yourself, but you just give them your money on a monthly basis. You set up your budget and they automatically invest in a balanced portfolio that is done according to your risk tolerance, basically. So in this video, I'm going to analyze these two companies. I will take a look at the type of investment product they have, how they create the balanced portfolio. I will check about the price. I will compare the price of these two platforms. And at the end, I will give you my point of view. As usual, you can jump where you want with the timestamp below, and let's begin. This is probably the question I get asked the most. Every time I review a stockbroker or some investment platform, people always ask, is this legit? They're going to steal my money? Is it safe? And this is funny because it seems that people are more focused on the fact that the company they use, like the broker or the investment platform, steal their money than to lose the money in the stock market, which is completely the highest risk we have out there. But anyway, these two companies, yes, they're two legit company. Let's switch to my browser where I put on the left Sarwa and on the right side StashAway. We can see that Sarwa is regulated by the DFSA, which is the Dubai Financial Service Authority, and also StashAway is regulated, is authorized from the DFSA. While Sarwa, born in the UAE, I mean this company was created, founded in Dubai, StashAway started their operation in Singapore and expanded later on the UAE. So they have the DFSA regulation, but are also regulated from different other countries. It's not that important to have the DFSA license because at the end what is important is who keep custody of the product we buy and where the money goes. From this point of view, the two companies are exactly the same because both Sarwa and StashAway keep the money in Saxo Bank. They use Saxo Bank to keep the custody of the ETF that you are investing in. So basically you give money to these two platforms, they pass this money to Saxo Bank and they operate through a Saxo Bank account. So the money doesn't remain with Sarwa or with StashAway, they are moved to Saxo Bank, which is a bank, is regulated from the European authorities, is 100% safe, is a very reliable stockbroker and bank. But to make it easier for investor to transfer the money and not to make a transfer directly in Saxo Bank, they hold, both of them, they hold an Emirates MBD account. So basically what does it mean? When you transfer the money to the platform, you transfer on Emirates MBD and the same day or one day later, depending from what time of the day is, they transfer this money on Saxo Bank. So for a period of time, your money are held by exactly Sarwa or StashAway in Emirates MBD, and after they are moved to Saxo Bank. I don't think this is a risk of any type. I consider these two companies legit, I consider these two companies reliable, and I also trust Saxo Bank as the custody of the product we are buying. You need to think that if you invest long term, it's a bit more important who has the custody of your product than the platform you are using, because this platform tomorrow can go out of business, you never know. What is important is the bank they have behind, which is Saxo Bank, and again I have a brokerage account open with Saxo Bank, is a very reliable bank, so I feel myself very safe from this point of view. When it comes to the investment product or the style of investment that these two platforms propose to you, we have of course some similarities, but also a lot of difference. To cut it short, Sarwa use a more simplistic approach, which I honestly like. It gives you just few type of portfolio you can choose, while StashAway it's more oriented into customization. I mean, they give some basic portfolio, but also they give you the possibility to customize that a lot. So I will enter into the detail of this customization a little bit later. So now let's just compare the two basic portfolio and try to understand how they work. From Sarwa point of view, I selected the conventional one, but you can also choose the halal or the SRI, which is more a source of social responsibility investment. From the other side on StashAway, this is the basic portfolio they have. And let's see, in Sarwa, you see, you need to modify your level of risk that goes from a very conservative to a growth. They call it grow, but it means very risky. And basically they change the allocation of your investment. Behind each of this bar there is an ETF, and they explain here which kind of ETF is. So for the US stock is the VTI, and so on for all the other class of investment. So you know perfectly in what they are going to invest. And if we go to the very safe, very conservative portfolio, we see that they invest almost all in US and global bonds. While if we move to the ladder to a more risky one, we see that they increase the amount of money allocated into stock, US stock and developed market stock, and have only less than 7%, just 6% in US and global bonds. From the other side, the StashAway use the same approach. You can move from a more conservative and more aggressive one. You see that the more conservative have the vast majority into corporate and government bonds and just few in equities. But what you see in StashAway a little bit different is they always keep commodities. They always keep a high percentage of commodities, 12% in the more conservative one and also 12% in the more aggressive one. I'm not that happy about that. I don't see why we need to keep so much into commodities. If we go to the more conservative one, we even see that they keep almost 25% between commodity and cash. It is too much in my opinion. It's wrong to keep such an amount in cash. The cash reserve is something that needs to remain in your bank account, not in their bank account. So this is only for investment. I want that they keep zero cash, not 13% of cash. It's crazy. But anyway, the system is approximately the same. We see anyway that they have a different way to name the product. For example, they like to divide, StashAway prefer to divide the bond between the government bond and corporate bond. So the bond issued by the government and bond issued by private company, while Sarwa give more the location of the bond, give importance to the location of the bond, so US bonds or global bonds, but this is not a huge difference. On Sarwa we see also that we can switch from the conventional investment to the halal and the SRI, which is social responsibility, and we can even add crypto. So we can have the conventional crypto, which had a 5% on Bitcoin only, and the SRI crypto, which also add a 5% in Bitcoin, while in StashAway this is not possible. But I'm not a fan of crypto, so I honestly don't care. For Sarwa, this is it. There is not much you can do. You need just to pick between conventional, halal, SRI, decide to have crypto or not, and choose your level of risk. That's it. While StashAway is more complicated. This that I showed you is just the basic one, but technically they have many other type of investment. We see that they can have, this is the generic powered by StashAway, the one I just showed. After they have thematic portfolio, general investing by BlackRock, flexible portfolio, and responsible investment with AS. Unfortunately, to show this into depth, I need to switch to the phone app because on the website they don't show good as they show on the phone app. This is a pity, but anyway, let's switch on to my. Here we can check the different type of portfolio. They have the cash management portfolio, which is a way for them to keep your cash, and you will earn 1.2% per year. Again, I'm not a fan to keep the cash into a platform. I keep the cash in my bank, not to them. But anyway, and here they have, for example, general investing powered by BlackRock. We can enter and we can select, they have 4 different portfolio managed by BlackRock. It's not exactly managed by BlackRock. I mean, BlackRock is the company that manage the ETFs they are buying with your money. So basically they are putting your money buying ETFs of BlackRock. And we see that you can go to a percentage of 20-80 between stock and bond, 60-40, 80-20, and 100% stock if you want the one more aggressive. If we move on to the flexible portfolio, this is one that is, let's say, a little bit more interesting. Here you can customize really your portfolio. You can decide to add gold if you want some commodities. You can decide to add which corporate bond you want, which government bond. You have different type, which type of international equity, real estate. It gives us a lot of customization. To be honest, I'm not that happy with that because If I want this level of customization, if I want to create my portfolio 100%, I will do with a stockbroker. I will open a stockbroker account, I will do it myself. The good part of Robo Investor or Robo Advisor, how you want to call it, is that they do everything automatically. You just set up your investment each month and you forget about. If I need this level of customization, if I need to study, I need to keep rebalancing my portfolio, I will just open a brokerage account. Anyway, moving on, they have the responsible investment, so the ESG investment. And again, here you can choose, let's go with the core one. And also here you can choose the level of risk you want, and they give you the different type of allocation. Again, it's a bit of a repetition of what we saw before, just related to the ESG. And at the end, they have the thematic investment. They choose 4 different themes that you can see right here, like environment and clean tech, technology enabled, so more on artificial intelligence, blockchain, cloud, robotics, and customer tech, so more fintech, social media, and healthcare. So you can decide your investment in one of them, and again, you build your portfolio, you decide which type of portfolio you want to build and the level of risk. But this is the part that bugged me a bit, because while on Sarwa you are exposed only to 6 different classes of investment, apart crypto, if you want also crypto, you see that you have 6 different ETFs. So they divide your money between 6 different ETFs, and you can find which they are. As I said, US stock market is the VTI, emerging market is VWO. You can find here, you can search on internet, and you can understand which companies exactly are inside these ETFs. While StashAway have a very huge selection of ETFs, you can see right here are endless. And basically you don't understand where your money goes. This is the point. You can select your level of risk, you can understand how they want to allocate, but it's a bit hard to control that. It's a bit hard to understand exactly in which ETF you are going to put your money. And considering the fact that the expense ratio of the ETF are different comparing to the different ETFs, for example, this one have a 0.20% per year expense ratio. We will speak later about how this works. The S&P 500 one has a very low 0.07 and so on. So it's hard for you to understand what is the expense ratio of all the ETFs that are inside your portfolio. While in Sarwa, it's much more easy to predict. There is also another key point, in my opinion, in favor of Sarwa. When you open your account with Sarwa, you open basically 2 different accounts. One is with Sarwa Invest, that is what we saw exactly up to now. So it's the Robo Advisor, the automatic investment system that we saw and that we're talking about. But at the same time, we can do trading with Sarwa. In fact, Sarwa has his own stockbroker. This is not connected with Saxo Bank, it's completely another product, but you have only one account, only one app, and you can switch between investing and trade. If for some reason after sometimes you become tired about the automatic investment, or you want also to start to trade by yourself, you already have the trading app. You don't need to open another account to do the identification, to connect your bank account. It is already everything inside that. This is a huge selling point in my opinion, because from my experience, many people that start with automatic investment, after they want to switch to their own trading, or at least do some experiment, or have 2 different portfolio, one in automatic investment, one that they manage themselves, and do everything inside the same app. It's easier, it's cost effective, and you already trust this company, so you keep remaining with this company. You don't need to open another bank account. So StashAway doesn't have that. It gives you this customization inside the app, but it's not real trading. You cannot exactly buy that stock, that ETF. You can just customize your portfolio. While with Sarwa, if you switch to Sarwa Trade, you buy exactly the single stock. If you want the review of Sarwa Trade, I did it. It's right here. It's completely another type of product comparing the Robo Investor, but maybe you are interested in. So let's talk about price, because at the end also price are important. First of all, I want to say that you don't pay anything on money you deposit or withdraw. There is no withdraw or deposit fee. This is critical because I know that many of you are worried about that, and you basically have 2 ways how to invest with these 2 platforms. If you are from the UAE and you want to transfer your money in dirhams, super simple. You connect your bank account both in Sarwa and in StashAway. They take money and they withdraw money easily without any fee, and it happens just in 1 or 2 days. Otherwise, if you are from abroad and you want to transfer US dollar, you have some coordinates where you can transfer the dollar, and of course you pay the fee at your bank for the transfer if your bank charge a fee. But so how these two platforms make money? They make money according to the amount of money you invest with them. They have a management fee that is annually calculated on the full amount of your investment. So if you invest $10,000, you pay the fee on $10,000. If you invest 100, on 100. And of course, it's a percentage fee. Let's start with Sarwa. On Sarwa, we see that you can choose on 4 different packages. It depends from the amount of investment you have, basically. So if you invest basically $5 up to 2,500, you have 1 year for free. Otherwise, you start to have 0.85%, 0.7, 0.5 if you go more than $100,000 invest. To make it clear, on a 10,000 managed investment per year, you pay $85 in fee. It's not high. I mean, 0.85, 0.7 is not a very high percentage if you compare to investing with a mutual fund or actively managed fund from your bank. Because if you do something like that, you will pay at least between 1 and 2% in management fee per year. Plus, you will pay a startup fee that can be between 3 and 5%, depending on what you accord, what you negotiate with your bank. Of course, it's much cheaper to buy this ETF by yourself with your brokerage account, because it's zero commission, zero custody fee. I mean, you can use some of your broker and buy these ETFs by yourself. But again, as I said before, if you want to use a Robo Investor, it's because you don't want to have the headache to manage your investment. So this is a small price you pay to forget about that and to just let invest automatically. Apart from the management fee, you need to remember that you always need to pay the ETF fees. Because these ETFs that are managed by, I don't know, BlackRock, SPDR, Vanguard or whatever, this company takes some money, and they take money directly inside the ETFs. You don't even notice that, but they take this money. Here, for example, they tell you that the average fee of their ETF is 0.25%. If you want to calculate by yourself, you can enter in a single ETF you're buying, check what is the expense ratio, and you will understand how much you're paying. But so this is something you need to count for that. So basically with Sarwa you spend between 0.7% if you have the platinum, if we consider the fee plus the ETF expenses, up to a little bit 1% if you use the standard package. Again, it's quite cheap comparing to a private fund, as I said before. But anyway, we need to understand that an average market investment goes between 6 to 8% a year. So of this amount, you lose 1% in fees. This is up to you to decide. From the other side, StashAway use a different pricing system. Depending from your investment, you have different fees. This is again like Sarwa. But these fees are blended, so it means that on the first $25,000 investment you pay 0.8%. As soon as you go up for the exceeding part, you pay 0.7, after 0.6, up to 0.2 if you have $1 million or more of investment. Let's try to make an example on a $10,000 investment. On a $10,000 investment, you pay 0.8%, while on Sarwa you pay 0.85. On $100,000 investment with Sarwa you pay 0.5, while on StashAway you pay 0.68, because as I said, the rate is blended, so Sarwa start to become a little bit more convenient. Basically, in my opinion, they are worth the same. You will spend approximately around 1.2% if you invest a very low amount of money, and you can go lower to 0.5, 0.6, 0.7 if you have a bigger capital. Of course, apart from that, you have the ETF fees, like also here is written that the ETF manager charge approximately 0.2%. We saw before the list of ETFs that StashAway manage. Some of them are even 0.7%, for example this ARK ETF. You need to take into account that probably you will spend a little bit more than what you see here, but in my opinion 1.2% maximum is the amount of fees altogether that you are going to spend for your investment. Again, this is not cheap compared to a stockbroker that you buy things by yourself, but you are paying the automatization. You pay the fact that they do all by themselves. You set up an automatic transfer into the platform, and that's it. You keep your investment for the next year. This is a very long-term type of investment. You don't use a Robo Investor if you want to do trading. You use a Robo Investor if your outlook of investment is 10, 15, 20, 30 years, or even if this is investment for your children. Do everybody need to have a Robo Investor account? For sure, no. Majority of people will invest with a stockbroker, because at the end it's not that hard to buy and sell an ETF. You can just pick one or two ETFs that is already a very diversified investment and invest your money in that. If you want to know which stockbroker to use, link in the description or in the video right here. There are some type of stockbroker that are zero commission and are very nice to start. So you need a Robo Investor only if you want to completely forget about your investment. If you don't want to look at your investment, if you don't want to understand how investment works, but you understand that it's a powerful system to increase your money on the long run, then a Robo Investor is full. If I need to choose one of these two Robo Investor, I will probably choose Sarwa. Sarwa has more a simplistic approach. It doesn't give you all that level of customization that you don't need it. This I said before, I will repeat now. If I want to have a full customization portfolio and I want to choose exactly in what I want to invest, I will just have a broker. I open a brokerage account, I buy the ETFs I want, and that's it. Why I need to pay a management fee for something that I need to set up by myself? The good part of this Robo Investor is exactly the fact that you don't need to think. You just need to tell, this is my level of risk, these are my money, do it. But if I need to start to enter and dig into this type of sector, yes, this type of sector, no, this level of risk, this type of ETF, I don't want to do it. And if I want to do it, I will open a brokerage account and I save the 1% per year. Also, Sarwa will give the possibility for you to trade this because they have a trading account inside the same app, so you can easily jump into trading if you get bored of the automatic investment. And also, it doesn't keep money in commodities and cash. Why I need to keep part of my investment portfolio in cash? I agree that need to be kept a cash reserve, and this I keep in my bank account, but the money I send out for investment and on which I'm paying the management fee need to be all invested. Not that I keep 12% or 13% a month in cash. It's without any logic. Anyway, I consider both a very reliable platform. This is just my personal opinion. Whatever you prefer, if you want to open an account to one of these two platforms, you can check the referral code in the description, so we both get some free stuff. If you have any question on how Sarwa or StashAway works that was not explained correctly in this video, please leave a comment, I will try to reply, and see you to the next video.